Most business owners hear the word crowdfunding and think of gadgets on Kickstarter or new tech startups pitching investors online. But over the last few years, something new has happened. Service businesses have discovered that regulation crowdfunding is one of the fastest, easiest, safest, and most flexible ways to raise real money. Here's what you need to know. Under U.S. securities laws, regulation crowdfunding, what most people call Reg CF, allows any private company to raise up to $5 million per year from both accredited and everyday investors. It's 100% legal, regulated by the SEC, and managed through licensed funding portals like WeFunder, StartEngine, and Republic. In 2024, U.S. businesses raised more than $800 million through regulation CFs. That's an all-time high. And here's the part that most founders miss. Nearly 20% of those raises came from service-based businesses, not tech. We're talking HVAC companies, consulting firms, cleaning franchises, marketing agencies, and home service networks. Why? Because service businesses have something tech startups usually don't have. Proof. Real customers, real revenue, real track records. Investors love proof. A marketing firm in California raised $1.4 million last year to expand nationally. A construction management company in Texas raised $750,000 to open 2 new markets. A home healthcare provider in Georgia raised $2 million to scale staffing and technology. These are ordinary service companies using modern capital tools. So let's break down why crowdfunding works for businesses like yours. First, you keep control. You set your own terms. Investors get shares or notes, but you still run the business. You're not handing over your board seat to a venture capitalist. Second, you build community. Your customers and supporters can invest directly. People who invest spend more, stay longer, and become advocates for your brand. Third, it's efficient. A properly run regulation CF can go live in 60 to 90 days. You don't need years of audited statements like you would for an IPO. You need clean financials, a clear business plan, and transparency. Here's what most founders get wrong. They treat crowdfunding like a one-time cash grab instead of a long-term capital strategy. Used correctly, it becomes a repeatable process. You can raise each year as you scale, using your performance to justify higher valuations. Now let's talk logistics. To qualify for Reg CF, you'll file a Form C with the SEC through your chosen platform. You'll provide basic financial disclosures reviewed by a CPA if you're raising over $124,000. Then you'll publish your campaign page, set a funding target, and start marketing to your network. The most successful raises hit at least 30% of their goal in the first 2 weeks. That early traction signals credibility to new investors. So before you go public, line up commitments from loyal customers, friends, and supporters. Crowdfunding isn't about begging for money. It's about giving people a chance to participate in your growth story. Here's a simple framework for your campaign message. The problem. What pain do you solve in your market? The proof. What traction or track record do you already have? The plan. What will new capital allow you to do? The payoff. How will investors potentially earn their returns? Keep it simple. Speak human. No corporate jargon. When you raise this way, you're not just accessing capital, you're creating momentum. Investors become marketers. Clients become shareholders. Your brand becomes more resilient because it's publicly supported. Now, some people worry about privacy or compliance. Yes, Reg CF has rules, but they're straightforward. File honestly, disclose financials, and communicate clearly. Platforms vet your documentation before anything goes live. Let's put this into perspective with a quick case study. We helped a service-based logistics company prepare their first Reg CF raise. They were doing $4 million a year, profitable but cash tight. They raised $1 million in 75 days, funded by customers, employees, and community supporters. Within 6 months, they used the capital to add tech systems, expand routes, and hire key managers. Revenue increased 32%. No debt, no banks, no loss of control. That's what modern capital looks like: transparent, inclusive, and efficient. If you're tired of waiting for your traditional financing, stop waiting. The money is out there. It's just sitting in other people's investments accounts. Reg CF gives you a bridge to access it. Remember, the best time to raise capital is before you need it. Start now while you have momentum. Your customers already believe in you. Let them invest in you too.